All right, hello, and welcome to Camel Finance. I'm your boy Camel, and I want to start by saying, did you notice yesterday I uploaded a video unusually late? I think it was about 11 p.m. UK time, and the reason for this was I went fishing all day yesterday, and I recorded the video late at night or the day before. I think I did it in two sections. And then I set it to upload at what I believed would be 10 or 11 a.m. But apparently I didn't see that it was p.m. that it was set to. So that video has only been live for 9 hours. You can go and watch that. There's really no point because we're gonna do all the updated charts today. But obviously you're welcome to go and watch that. Anyway, apologies for getting it out late. Today's video is of course on time and on schedule. The markets are currently now repricing the probability of default of 47% for Credit Suisse. So whilst I was fishing yesterday, apparently Credit Suisse is blowing up and getting bailed out all in one day. I've never really given Credit Suisse much energy. There's been talk of it blowing up for some time, and whenever I've sort of covered it on the channel, I've only glanced and glazed over it just to sort of say I don't really care about Credit Suisse. And the reason I never cared is because most people don't know this, but I've said this before, Credit Suisse is a SIFI. It is a systemically important financial institution. A SIFI label is given to things that are considered too big to fail. So Credit Suisse is not going anywhere. It can blow up, it can borrow more money, and it can blow up again, and it can repeat this doom loop as many times as it wants because it is already being determined to be a SIFI. It's too big to fail. And here we are. They're about to borrow 54 billion from Swiss National Bank, who, by the way, don't have any money anyway. But there's 2 points I want to make about the banks blowing up, okay? First of all, JP Morgan is telling us that the Federal Reserve's emergency loan program is going to inject as much as $2 trillion into the US banking system. So that's $2 trillion. So liquidity is coming. Longer term, this is inflationary. Why? Because, of course, when they print money, when they inject liquidity into the system, around 12 to 18 months later, we start to see the inflationary forces come into work after that money has trickled through the system a few times. So here it is again. JP Morgan says the Fed loans will provide up to $2 trillion of liquidity. The second point I want to make is there is literally nothing more deflationary in the near term than a banking crisis. Now, I've been talking on and off for a while about this pendulum swing where you have disinflation on the right, you have deflation on the left, and the pendulum is already swinging in motion from disinflation to deflation. And of course, what I'm talking about here is we are currently in what I believe is the Goldilocks zone in the middle. That means it looks like inflation is coming off. It looks like we're narrowly going to avoid a recession. It looks like we're going to be able to possibly have a soft landing. And during this Goldilocks zone in the middle, the markets tend to rally. The analogy here I've shown before on this channel is that if you go from boiling hot to freezing, there's a period in the middle where it's nice. And I believe that's where we are right now. Make no mistake, that pendulum is swinging. Inflation is coming off in the near term, but that pendulum cannot be stopped. It is indeed going to continue to swing towards deflation, and we will eventually have a massive market crash. But typically speaking, in this Goldilocks zone in the middle, the markets will rally. Yesterday as well, whilst I was fishing, PPI came in at 4.6%. The previous was 6%, and you can see the chart here in blue, as you can see, coming off a cliff. So inflation is indeed coming off. We are indeed in a disinflationary period at the moment. And I think Iced here nails it. He says, look, the narrative last week was sticky hot inflation and a 50 basis point hike. We now get extremely disinflationary PPI. Meanwhile, FinTwit has wasted a month debating hot inflation, which never showed up. Remember, the CPI print the day before came in cold as well. And so all of these bears are now using the banking collapses as their bearish narrative because they were wrong about sticky inflation and higher for longer. Iced has never been more bullish. I am slowly turning from neutral to bullish, but I still think the market has to do a lot of work to prove to me that it's the time to go back to full exposure and full aggression. I don't believe we're there just yet, but I do believe there's a good chance we can get there in the near future. Target probabilities for next week's FOMC meeting currently sitting at around 1/3 to 2/3, with 1/3 being a pause in rate hikes and 2/3 on a 25 basis point hike. Notice that 50 basis points is completely off the table as it stands. Raoul Paul here is convinced that we're going to see 200 basis points or more of cuts to come this year. And I would speculate that that's likely correct, but we won't see them cutting until after the middle of the year. Over in the Bitcoin world, Bitcoin is doing Bitcoin things. It always does Bitcoin things. It will continue to do Bitcoin things. Millions of Fidelity clients can now buy crypto for the first time this week because Fidelity Crypto just quietly went live, giving millions of retail customers access to Bitcoin. Fidelity holds and manages something like $4.5 trillion. So make no mistake, this is massive. And like clockwork, as you can see here from Plan B, Bitcoin is popping above realized price, 5-month realized price, which is the short-term holder basis, and closing in on the 2-year realized price. So again, looking at this and being bearish for me is incredibly difficult. It's also difficult to be bearish for this chart here. When I look at this chart here, as you can see, divergence, as you can see, turning bullish on a weekly time frame, and here, breaking out, retesting, and looking for that resumption higher. Study this chart and tell me where the bearish narrative is. Furthermore, the pi cycle indicator, whilst started as a kind of meme, is actually turned out to be a fairly good indicator for when to enter and exit the market with a longer term basis. As you can see here, last time it triggered, very good things happened to the price of Bitcoin walking forward. The same was true here, and now it is close to triggering once more. Lastly, before we get into the charts, study this. We have a lead-in phase, a bump, a consolidation before a breakout retest, and a resumption higher. This is what's known as the bump and run reversal bottom. If I click into Bitcoin's chart, we have our lead-in phase, we have our bump phase, we have a consolidation, and now we are looking to complete breakout retest, resumption higher. The textbook target would be over $100,000 for Bitcoin. So hopping into the charts, you can see here, okay, not a great deal has changed. We are experiencing a lot of chop and volatility. That's to be expected ahead of FOMC. You can see we're holding this blue line, which has been support going back all the way since here, but it's probably not too long now before we break down and lose this level. 10-year yield stopped at a logical place, but likely again, waiting for FOMC next week. And of course, the same is true of the 2-year yield. The 2-year yield looking like a hot knife through butter through all of these levels of support horizontally, waiting for FOMC next week before deciding where to go next. Natural gas is still chopping around inside of its box, so not much more to say about that. Gold and silver. Is this going to form a left translated cycle? Are we going to have something like a day 11 high that then is about to roll over before we get that last breakout? Or is this going to form a right translated cycle that tops somewhere around day 18 or 19, pulls back into a daily cycle low, ready to go again, in which case we'll have to abandon my yellow doodle here and go to buying dips in an uptrend. So that is to be determined at the moment. For now, this is still my preferred look, as you can see, for the metals, but I think a little bit more patience so that we can know what the market is doing, because there is nothing to say, in my view at least, that this isn't just going to roll over one last time. Bitcoin looking somewhat confusing, because we really needed to see a close above this big yellow horizontal line here. That would have been ultimate bull mode confirmed. As we currently sit underneath it, we still have to be open to a drift down into this next cycle low before we can go, since we likely have a failed cycle here where we come down and undercut that low. That of course remains to be seen. There's always a chance that this cycle here, this low here, excuse me, is the cycle low, and therefore we've got a full cycle ahead of us. For me, we're in, we're long, we're strong. We have that expectation and situational awareness that we could roll over into this cycle low, but I will be more than happy to go back to full crypto exposure if we can get a Bitcoin close and resume upwards above this big yellow level. So we will see, can we get a true range breakout on a daily closing basis? Can we hold that level? If so, I think things are going to get very bullish for Bitcoin and crypto in the near term. The crypto related equities working on breakout, retest, resumption. Here's Coinbase. So is it time to get long? In my opinion, not quite yet, but we are getting close. If we look at MicroStrategy breakout retest hasn't resumed yet, but possibly looking to over the next couple of days. If so, then we can indeed go back to full exposure, or start to add these positions back, I should say. The same is true of Riot. Breakout, retest, looking for that resumption higher, but it hasn't done it yet. And Marathon, okay? Breakout, retest, can it hold? Can it resume higher? If so, then these longs can be put back on, and they will be put back on by me. But as it stands, we just haven't quite seen the follow through I need to see yet. FTSE 100 is working on a back test of this enormous breakout back here, our original entry. I mean, talk about the reason for respecting risk. We got in, rode this trend up here, and then when we get the breakdown, we have to exit the trade. And look, in just a few sessions, we're all the way back to the entry that it took weeks and weeks. Very good illustration of why you have to respect risk in the FTSE 100. US equity market still not really exciting me yet. If we can get a breakout of this downward sloping blue resistance line, then of course that will be a long. But patience is needed in the near term. Here's the Dow, kind of not really doing much. The thing I'm interested to see is, can it hold this blue line and get a push off of here? Perhaps we can see that after FOMC next week. NASDAQ is starting to look like it wants to lead. So it hasn't broken out. It hasn't done this convincingly. We could certainly be a bit stricter with this line and connect all the wicks. And in that case, then we're not quite there just yet. But a breakout of this line, a retest resumption preferably, and we can get long here, and the long can look something like this for the NASDAQ. Like I said, we're not there yet, but breakout, retest, resumption of this, and we can start to get excited for the NASDAQ, particularly if the rest of the US equities are keeping up with it. And here's the S&P 500. You can see blue bear market resistance line. Can we hold that? We're likely going to continue to chop it for a little while. We also have to be aware that we, like with Bitcoin, have this failed cycle, right? So because we have that failed cycle here, that tells us that we should be indeed in a downtrend, or at least a consolidation cycle into the cycle low due at the end of April before we can resume higher. Something like a rate pause at next week meeting could see the S&P breakout, and if so, then we'll add along on a breakout of this downward purple sloping resistance line as per the NASDAQ and the Russell 2K. So that's the analysis for today. I'll get this uploaded for you. Sorry about yesterday. Like I said, I think I set the video to upload at PM instead of AM UK time. So by the time you got it, that wasn't really very helpful, I imagine. However, as you can see, I didn't really take any additional positions. I haven't really added any exposure. So you haven't actually missed anything through my incompetence. Anyway, we're back in the swing of things now. We're starting to look like there's a chance at repair. We still have to be open to all outcomes. As you can see, I am cautiously optimistic. I'm optimistic and positive about the future of Bitcoin. I think there's a good chance, because we're in the middle of this pendulum swing from disinflation to deflation, that we can actually get some rallies. As you can tell, probably, hopefully, I am absolutely not sat here with full conviction that we are going straight up, and I'm certainly not sat here with full conviction that we're going straight down. I think you should be wary of anyone that is. Nobody knows what's going to happen, okay? Nobody knows, because the Fed could easily do a 50 or 100 basis point hike next week, and then we'll all be sat here going, oh wow, it's a controlled demolition. Or they could do a pause and everything could melt up and all the bears will get destroyed. Or it could be some perfectly reasonable outcome, like a 25 basis point hike, and then that's mostly priced in. So, you know, anything could happen. Be wary of people that have huge and heavy conviction, because they don't know what they're talking about. Just like you or I don't know what we're talking about. All we can do is look at the charts and let the charts tell us what to do. I'm your boy Camel. I hope you're doing well in life. In the meantime, take care from me. I wish you all the best. Cheers. Bye.